Will taking a forbearance on my mortgage affect my credit? A lot of people are asking that question right now. My name is RJ Baxter with Fairway Independent Mortgage. We are getting this question because of the government's mandate to loan servicers that they have to offer to people experiencing a hardship because of the coronavirus a potential forbearance or deferring payments on their mortgage if they're in trouble and can't make the payment. So I want to talk a little bit about whether this is going to affect your credit if you decide to take a forbearance. So first of all, let's talk about what a forbearance is exactly. So what this is, it's basically an arrangement with your lender to skip a payment or a number of payments. I've heard anywhere from 90 to 180 days is being arranged right now. However, it's important to know that the money has to be paid back. So this is not just the payment goes away and you never have to pay it. And I've also seen a lot of misinformation in the media going around where they're saying that the payments are just tacked onto the end of your mortgage. And that may be true in some cases, but in many cases, the payment arrangements have to be worked out in the short term to repay the payments that the back payments over the course of perhaps your next 12 payments. Once you are able to make the payments, they amortize it over that 12 months, or the full forbearance amount is due in order to get out of the forbearance. So these are the things to consider, and the government hasn't really mandated to servicers exactly how they have to do this or how they should do it. So from what I've heard, it's differing from servicer to servicer. So that's a little bit about the gist of what this forbearance is. Now let's talk about how it affects your credit. It was put forth that if someone is calling in with a hardship to arrange a forbearance, that the servicer is not supposed to report it to the credit bureau. So that is a good thing, that they're not supposed to report that your mortgage is delinquent. You're not going to have a 30-day late or anything like that. However, you got to think about it from a credit reporting perspective. What is going to appear on the mortgage? So you don't make April payment and someone goes to pull your credit in May or June. What does it say for April? Does it say paid as agreed? I mean, you haven't made the payment, right? So it can't say that. Does it say 30 days late? No, we've already been told it can't say that. So there's basically going to be a hole in your credit report for that payment. So if that accumulates over time, you have a hole in April, you have a hole in May, another one in June, lenders are going to notice this. So if you go to apply for credit, they're going to see this. So for example, if you're seeking a mortgage loan, now if you have a true hardship and you've lost your job, let's say, you probably can't qualify for a mortgage anyway. But if you can, and I've heard of people requesting these forbearances and they don't actually have an economic hardship. So if you go to apply for a mortgage, let's say, you cannot get a mortgage approval if you're in a forbearance. And even though the servicer can't report this to the credit bureau, the lender is going to see it and notice it, and they're going to have to document that you're current on your mortgage before you can obtain another mortgage. I'm talking about whether you're refinancing the one that is in forbearance or trying to obtain another mortgage, buying another house, or buying an investment property or whatever it is. So these are all very important considerations to take into account and to think about carefully before you enter into a forbearance agreement with your current loan servicer. So give me a call if you have any questions on that. I'm happy to answer it for you, or anything else loan related. My name is RJ Baxter, Fairway Independent Mortgage. You guys stay safe, stay healthy, and have a great weekend.